The active strategy means how I invest my money when I find a deal myself. So let's say I'm investing in the stock market. I might be looking for a company to invest in. I'm not a trader, I'm a long-term investor. Now, if you look at the stock market right now, what you're gonna see is that the valuations of companies are very high. We are seeing record high valuations where if a company earns $1, this company's valuation of the company will not just go up by $1 or $10 or $20, but sometimes the valuation of a company, the market cap of a company will grow by $100 for every $1 the company earns. So now when I'm actively investing, what I'm trying to do is I'm trying to find a company that I think is undervalued, or an investment in this case that's undervalued, that way I can come in and buy. Now this is a lot harder to do when everything is expensive, because now you got to be way more pickier and you got to spend way more time trying to sort through deals, trying to find the right deal and trying to find an opportunity that can actually make you money. So the first thing you want to do when you're actively trying to invest your money is you want to make sure that you are not chasing stocks or investment. Doesn't matter what type of investment we're talking about, stocks, real estate, crypto, it doesn't matter. Do not chase your investments. You are going to see massive run-ups and rallies in all different types of assets because people are going to get excited. When you have a bull market, a market that's going up, you have a lot of money out there. And when people have a lot of money, they can do a lot of dumb things with that money. So you can see a stock run up and then people will say, oh my God, this company is making so much money. Or people think it's making a lot of money. This company is making a lot of people a lot of money. Everyone's getting rich off of it. Let me come in and have some fun too. That's when you come in and buy, maybe use margin to come in and buy. And you do not want to be the person that's just chasing the stock, chasing the asset, because these are the people that get burned, because eventually the steam is going to go away. The early investors, the fundamental investors, the people that invested for the value are going to say, holy crap, this company is worth way more what we think it should be worth, so let's unload some of our shares. As they start to do that, you'll see the stock starting to come down, and then all these people that invested out of emotion, out of greed, are going to say, oh my God, I'm losing money, what do I do? And then you panic sell. I am still actively looking for deals in the real estate market, the stock market, and the cryptocurrency market, but the way that I'm doing this now is I am being pickier than ever. I'm being very picky with every deal that I analyze, and I need to know my goals, because before I make any investment decision, I need to make sure that the investment fits my goals and my criteria. So let me show you what that means. In the real estate market, I want to make a minimum 7% cash on cash return every single year on my investment. So if I take $100,000 of my own money and I invest it, I want this $100,000 investment to pay me back of $7,000 of positive cash flow a year. That's profit after all expenses. If the deal does not pay me $7,000, I don't want it. You have this market right now, especially in the real estate space, where people are marketing deals not for 7 caps or 7% returns, but some people are marketing deals at a 1% return. Meaning if I invest $100,000 today, I'll make $1,000 of profit. And what they're saying is, hey, yeah, it's only $1,000 worth of profit today, but in just a few years, you're gonna be making great returns, because they're assuming that you're gonna see 5 to 10% annual rent growth year after year after year. So they're selling properties not based off of today's prices, not based off of today's profits, not based off of today's earnings, but based off of future earnings. I don't like to do that. That's speculating. Sure, if rent prices go up, that's great, but I don't want to bank on that. I want to make my investment decision based off of what the property is paying me today. So when I'm investing my money today, I want to look at today's prices. That way, if things slow down and I have to lower rents because the economy is slowing down, I still have some margin. So I'm not paying out of my pocket to maintain the property. And if rent prices go up, hey, I'm still benefiting. The thing that makes this so tricky is we're in an environment where everybody is getting top dollar for real estate. So who's gonna wanna sell real estate based off of a reasonable price when everybody's getting unreasonable prices with real estate? Well, this is where I gotta do a little bit more digging. I gotta spend a little bit more time trying to find the right properties, and I gotta spend more time doing the due diligence. In the previous decade, it was the complete opposite. You had sellers fighting against each other to sell their property. So buyers were able to go out and find deals very easily because there weren't as many buyers out there. Now, because we have lower mortgage rates and we have all this demand for people wanting to buy a home, you have a lot more people wanting to buy a home than people actually selling homes. So it's a shift where now you have to be way pickier. And now if you want to find a deal that's paying you a good return based off of today's values, well, now you have to know what your goal is, and then you have to know where to look. I'll talk about real estate, then I'll get into stocks and crypto in just a second. But in the real estate space, that means you need to know the right real estate agents, people that work directly with investors, because some of them are going to find deals that are not on the market. They're going to know the people that are trying to sell their homes, and if they don't want to list it on the market, they want to sell it quickly, they need to know the right people. So you want to start networking and getting to know these real estate investor agents. And it's really not that hard. Just go into Google, search real estate agent for investors in your area, and you'll start to see some people that work as real estate agents for real estate investors. Call them up, let them know that you're looking for rental properties, let them know what you're looking for, and then they can start working with you. Second, start calling property management companies. Property management companies are working directly with the landlords. They're working directly with the real estate investors, so they have the deals before everybody else does. So now if I'm a landlord and I want to sell my property, I might just tell my property management company, hey, do you have another investor that would want to buy my property? And they have their whole network. So what you can do, just call the property management company and say, hey, I'm looking to buy some real estate rental properties. Do you have anything available? And they can put you on their database. So if something hits the market, they can call you first. And you have to be willing to look at deals that nobody else wants. That means looking at distressed properties. I love working with distressed properties. These are properties that are physically beat up, where I can come in and renovate the property. And now not only can I buy the property way below market value, because nobody else wants to buy a property that smells like crap, that looks like crap, but I love these type of properties because I can come in and renovate them and make it look a whole lot nicer. And now when I rent it out, it's essentially a brand new property because everything is brand new in there. And now I also increased the valuation of the property, and I was able to buy it at below market price, and I can usually fix it for a whole lot less than what it would have cost me if I bought the property fully fixed up. If we're talking about the stock market or even the cryptocurrency market, you need patience. This is one of the biggest things that will determine if you become successful or not when it comes to investing your money in things like stocks and crypto, because a lot of people don't have patience. They want to see the returns right now, and they want to find the deals right now. What you need to start doing is start looking for the investments that you want to buy. Start looking for the right companies, start paying attention to their earning calls, and start to see which companies do you believe in for the future. Now what you want to do is then find a company that is undervalued. That means you want to look at how much money this company is making, and then look at the market cap of the company. How much money is this company worth? If you think that this company is undervalued, that's when you want to come in and buy. Or if it's not undervalued, then you can wait for it to become undervalued, wait for a pullback, and that's when you can come in and buy. What you don't want to do is find a company that you like, you analyze it and say, okay, I think this company is overvalued, so let me buy it anyways. If you think the company is overvalued, you should not be buying it. What you want to do is look for a company that you believe in, that you think is undervalued, that you think will be innovating and producing more money in the future, and then come in and buy that. If we shift gears to the cryptocurrency market, and if you're actively trying to buy cryptocurrencies, the first thing you got to understand is that cryptocurrencies are way more speculative. They're way more volatile, and they have way more risk than your traditional investments because nobody really knows what's going to happen with cryptocurrencies. But the thing that you have to understand is if you're trying to actively buy them, you want to make sure that you understand the risk. Look, I invest in cryptocurrencies. I own cryptocurrencies, but I also understand that there's a lot of crap in the cryptocurrency space. So what you want to do is if you're investing your money in cryptocurrency, make sure you do your education, make sure you do your own due diligence, and don't just blindly throw your money into something where you think that you can 10x your money in 6 months, because there's a lot of potential risk in there and there's a lot of crap in the cryptocurrency space. So you want to make sure that you're doing your own due diligence and not just blindly throwing your money into things that you think can make you rich overnight. And you should also remember that in the cryptocurrency space, you have wild swings up and down. So that means that you can see the cryptocurrency market boom 20-30% essentially overnight, and you can also see the entire cryptocurrency market crash by 20-30% essentially overnight. So you got to be smart. You don't want to be chasing things. You got to know your goals, and you got to be patient. And especially in the cryptocurrency market, you need to do your own due diligence. You got to do it in the stock market, in the real estate market, but especially in the cryptocurrency space, because if you don't, you could see your money get wiped out in an instant. You might remember somebody created the coin called the Squid Game coin based off of the Squid Game show that was very popular on Netflix, and a lot of people got very excited, and some people dumped their life savings into it. And then this coin turned out to be a scam, and everybody who invested their money into this coin, hoping that they were going to get rich, lost everything. You had people that lost their entire life savings because they were just dumping their money into this crap coin. So you gotta make sure you do your own due diligence especially when it comes to cryptocurrency, and understand the risks that are involved. Is there a lot of potential upside? Sure, but there's also a lot of risk, and nothing can go straight up forever. So you want to make sure that you understand, if you're actively investing in cryptocurrency, what does that mean for you? What are the risks and what are the potential upsides, so you don't potentially lose more than what you're willing to. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide that goes over what passive income is, how to start generating passive income, and different passive income strategies. These are things that you can start doing even if you don't have a lot of money. So if you want to read this free guide on how to start generating passive income for free, all you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.